Friday saw major volatility within financial markets off the back of the news that the Chinese are imposing restrictions on the global export of their rare earth materials. This is key for not only the US, but many countries around the world, with the Chinese really dominating the provision of those minerals, and they're key for technology developments. Also, the likes of the defense sector really heavily reliant on imports of rare earth materials. From the US perspective, we've seen them announce that 100% tariffs kicking off on the 1st of November. There's plenty for us to get into on this front, but I really just wanted to discuss some of the key elements around this and whether this is an opportunity for us to buy the dip, whether this is indicative of problems that lie ahead, and what this means in terms of the markets from a volatility perspective. So let's get into it, talking about the US and China and all things rare earth and trade related. So first and foremost, let's just talk about rare earths. Now, rare earths are a collection of different materials and minerals that are mined. They're generally fairly abundant, but it can be a very dirty business trying to mine them. That's why many leave it up to the Chinese to do so. If you look at where it's produced and where it's refined, by and large, the Chinese really are dominant on this front. All is well as long as it is supplied to the rest of the world, and in which case companies that are reliant on it can find this material, buy it from the Chinese, and essentially all is good. But the Chinese are now starting to turn the screw. And certainly what we've seen at the beginning of Donald Trump's second term in the White House was that his focus at the beginning around the trade war was all about turning the screw on the Chinese. It felt like the Chinese were the number one target in the trade war, owing to the massive trade surplus they have over the US. But the Achilles heel appears to be on the rare earth front. And essentially, every time that the Chinese decide to restrict the exports of rare earths into the US want to come to the table and make a deal. That appears to be exactly what's happening right now. Now, you can see here that roughly 90% of the world's refined rare earth materials comes from China. Then when it comes to the mining of it, it's over 60% coming from China. Now, this is something that could be built up in other parts of the world, but like I said, it's relatively dirty in nature. So there's many countries that don't necessarily want to do this anyway. And if there was to be a sort of concerted effort towards building up their own supplies, many of these operations would take many years to be able to come to fruition. So it's not something that can be resolved overnight. So essentially, the Chinese have this ace card in their pack. Now, this is relevant at the moment because of the fact that, of course, we have the upcoming discussions or negotiations or meeting between Donald Trump and Xi Jinping. So the big question mark here is whether this is trade negotiations going on behind the scenes that are essentially failing, and therefore the Chinese have come out in a bid to essentially attack the US, knowing full well that these trade negotiations have faltered. Or is this a preemptive move in a bid to position themselves before we see the two leaders meet? I don't necessarily think that this move from the Chinese is something that they want to hold to, because ultimately it's just part of a negotiation in my mind that we've also then seen retaliation on the US front, right? So both sides essentially play their cards, they show their hands, show their strength, and then at the end of the day, they're likely to come together and form some sort of agreement. Now, we've seen this in the past, people call it the so-called taco trade, because Trump always chickens out, right? So right now, it's 100% tariffs being added onto imports from China. That's kicking in 3 weeks' time. Why is it kicking in 3 weeks' time? Well, because it gives him time to be able to strike a deal, right? If he's actually wants this to happen, then he'll be looking more likely for it to happen instantaneously. That is not happening. So if we're looking for signs that this is something that will blow over, look at the timeline in terms of when this is going to be implemented. Rare earths are, of course, absolutely crucial. And it really moves us away from a framework where tariff levels and tariff rates are the only thing that's important, because ultimately we've seen it recently with the imports of soybeans into China. They used to take a significant amount, multi-billion dollars worth of soybeans from the US. Well, recently they've been taking absolutely nothing. And so we've got US soybeans sitting there, wasting away, waiting to be exported. They're not being exported to the Chinese. Donald Trump's going to be feeling the pressure because of that. He's recently been coming out saying that he's going to help the farmers. That's because the Chinese, they don't have a trade deal with the Chinese that has enabled those purchases to take place. So, you know, tariff levels as a whole are important, but then there's sector specific things. And then there's the fact that the Chinese ultimately have this ace card in the pack when it comes to the rare earths. Notably, if you're looking at the moves that we saw on Friday, really a lot of it centered around the tech sector. Now, there's a number of reasons why this might be. First and foremost, you're going to be looking here and saying that the most elevated metric or the most elevated market by price to earnings ratio is the NASDAQ. And that's because it's the tech sector that has the highest multiples. You can see that on the right as well, information technology with the highest price to earnings ratio. That means it has people fearful that the valuations are overstretched. And so who is most heavily hit by this restriction in terms of the provision of rare earths? Well, it's the tech sector. But then add to that, you have the question marks around what happens if this 100% tariff is imposed, what happens in terms of inflation levels, because the price of Chinese imports go up heavily. So inflation potentially goes significantly higher. The pace of easing from the Federal Reserve eases, and therefore that also is detrimental to the likes of the tech sector, which is heavily reliant on loose monetary policy and the like. So if we're looking at areas that are going to be impacted by this, look out for the tech sector in particular. There's a number of reasons behind that. You can see here in terms of the declines that we saw on Friday, most heavily felt within the big tech names, significantly so around those in the AI space and the chip space, which you can see there with NVIDIA dropping almost 5%. So massive decline we saw on Friday, but we are expecting a more positive open in the US. US futures point towards that. We've seen that already in terms of Europe. Now, notably, what we've seen on Monday is also that we saw a 7-month high for Chinese exports. Now, this is really interesting because, of course, I've already shown you that the tariff levels on Chinese imports into the US have already been heavily elevated. So how has the Chinese managed to see a 7-month high in terms of their export growth on a year-on-year basis? Well, what we can see here is that ultimately the exports going to the US have dropped off significantly, but the exports to other nations around the world have moved sharply higher. So they're essentially finding other markets for their goods. Now, you could say that this means that essentially they're having to drop their prices to try and attract these new buyers, and therefore their profit levels in China aren't going to be what they were previously. But the Chinese are essentially controlled economy, so that won't necessarily be as much of a problem. They're willing to sort of deal with some hardship over the near term if it's for the greater good, and therefore whilst the US have their soybeans sitting there wasting away, the Chinese have been managing to find other markets. And you can see here in terms of the sort of breakdown on where this is going, you can see that sharp decline in terms of exports going into the US, but it's being replaced. You can see Africa at the top end here, ASEAN as well. So we can see that there are other markets for the Chinese to move into, and that sort of strengthened their hand as well, because the US have been utilizing tariffs and saying, look how much we can hurt your economy. The Chinese now, through the trade data that we've just seen this week, highlighting that in actual fact, we are in a very strong position, irrespective of what you do on the tariffs front. And if we then hold back these rare earth materials, then your big tech companies are going to be in big trouble. So certainly the ability to find agreement, to find a deal here is going to be absolutely critical for valuations in the US in particular. We can see here that under Donald Trump, we're following that same pathway in terms of the decline for the US dollar against the Chinese yuan over the first, say, year of his presidency. Excuse me. The fact that it looks like the US isn't in a great position and the Chinese are making these moves from a position of strength, it seems. Excuse me. Does point towards the possibility of further downside to come from here. But like I said, if tariffs are imposed at 100% and all of a sudden inflation in the US rises, the ability to cut rates will be hampered and that could hinder the downside for the US dollar. But dollar yuan, at the moment, following that same blueprint. So what are we sort of taking away from this? Ultimately, you can see that the Chinese are in a relatively strong position. Certainly, they have lost a lot of trade from the US. That's been dropping off significantly. But by and large, they're finding buyers because the exports figures gone up to a 7-month high. You can see a sharp rise in terms of some of the Asian nations, some of the African nations picking up those goods as a result. It means that the negotiations later this month between Xi Jinping and Donald Trump, if they go ahead, will be a little bit more favorable on the Chinese side. Trump appears to be desperate to make a deal. He's already said on the weekend, don't worry, they made a mistake. In actual fact, everything's going to be fine. We're going to find a deal that's good for China. It's good for the US. This, to me, is a bit of a sign that, the whole move into sort of Chinese equities, Chinese tech companies, I think it's likely to continue in my mind, in particular because this sets the basis for the Chinese to have a relatively strong hand in trade negotiations. Donald Trump does not want to impose 100% tariffs on the Chinese. I'm certain of that. And he'll want to see rates lower, and that will essentially be hampered if he does impose that 100% tariff. So they'll want to see a deal. In all likeliness, the fact that this has all happened over the course of the weekend is not a surprise. We've seen it time and time again in the past. Donald Trump drops some big news, and then over the course of the weekend, it gives them time to flesh it out without seeing massive market volatility. The market's open in the green on the Monday, and then hopefully we then see further moves towards essentially positive developments between the countries. That's what I expect. We're likely to see further volatility and uncertainty. That is for sure. And we've got a big week ahead of us. We've got earnings season kicking off and the like. So I wouldn't be surprised to see further downside in terms of equity markets, especially until we see greater clarity and greater confidence coming into the fold. But certainly, the news that we saw Friday, that seems like we're seeing a collapse in terms of the relationship between the US and China. In my mind, this is the moves being made as a precursor to the negotiations between the two leaders. And whilst I don't know that they're going to strike a massive trade agreement, I do think we will see an agreement that sees this restriction in terms of the rare earths going into the US drop off, the 100% tariff drop off, and most likely an easing in terms of some of the tensions that have been building behind the scenes that hopefully will lead us towards a trade agreement between the two countries. In terms of a couple of charts that I wanted to show to you guys, first and foremost, let's just look at things from the perspective of gold. Of course, when we're seeing fears around the US shutdown rolling on, the breakdown in terms of trade relations and the like, what's going to benefit? It's precious metals. Gold hitting record highs once again, rallying up towards that 4,100 mark, a little bit shy of that, but the continuation of that higher high and higher low pattern. And then looking at the S&P 500, that's the drop off that we saw on Friday. The long-term trend shows you that weeks like this are relatively rare and they're generally not long-standing. So I wouldn't be surprised to see this bottom out from here. Let's just try and see if we've got any sort of notable trend lines coming into play here. So that could be an interesting one. We've got from the perspective of sort of horizontal support that's coming in around this zone. So you've got the low here at sort of 65.52 that potentially, if we open in the green, could mark the low, and then we start to build from there onwards. So potential trendline support, horizontal support coming into play here. But certainly from my mind, I think that the fear on Friday could be somewhat overblown. And it comes to the benefit of gold, and it just provides another string to the bow for gold that I think is going to continue to gain ground. But by and large, I don't necessarily think that the fear on Friday is as justified as it appears to be on face value. I think things will improve, and we've already started to see exactly that. I hope this has been useful. Make sure to like, subscribe, and follow for more. My name is Josh Mahony, Chief Market Analyst at Scope Markets. Have a great day and good luck trading.